Welcome to IVoT Eye On Investing, where our experts look at the economy, the market, and particular companies from a long-term fundamental perspective. IVoT Financial Training, Inc. is a company committed to making financial mastery accessible to everyone. To learn more, go to ivot.academy. Let's get started.
Hello, everyone. Welcome to Eye on Investing with IVoT. I'm your host this week, Andrew Tang, CIO of Turner Financial Group. Both Ed and Emil are out this week. They're not feeling well, and hopefully they will get well soon. It is Labor Day, or was Labor Day, for the week of September 1st, 2025. And we have had a boatload of information. So we'll start with the preliminary second quarter GDP numbers that came in at 2.5%. That is a little bit better than the 2% that was the original consensus. However, the market did not react too much to that. Rather, the market was waiting for NVIDIA's earnings. So NVIDIA's earnings came in higher at 46.7 billion, slightly higher than the estimate. But more importantly, CEO Jensen Huang of NVIDIA had given the outlook for the rest of the year for revenue coming in at roughly about 54 billion. So even though with the China situation that is still remain to be seen, NVIDIA is still quite hopeful that the company will be able to sell to China. In addition to that, you see inflation is still coming in at roughly about 2%, according to Truflation. We're also seeing the yield for the 10-year is slightly retracing. However, the stock market for most major indices, for example, S&P 500, the NASDAQ, mid cap, small cap, and the developed markets and emerging markets, they all failed to break through their previous high. And so what we're entering in right now, it's somewhat a failure to break out. And so we are kind of rolling over. And a lot of people are wondering, is this the beginning of a bust cycle, versus a boom cycle? Or is this something else going on? So in my opinion, we are just entering into what I call a digestion phase of the market. So as we all know that we have been undergoing quite an expansion with the stock markets because of AI, because of different innovation, robotics, automation, and all of the above. But you see headlines that come across, especially coming from Meta, that they are having a hiring freeze for AI department, for example. That really sent a negative signal to the stock market. But I look at it this way, that a company like Meta or the Magnificent Seven companies, after they have been spending quite amount of money for the first half of the year, I think it makes sense for them to pause and digest what they have taken in. And so for this reaction, for this consolidation or the temporary sell-off, and I expect the movement anywhere between 5 to 7%. Technically speaking, it should be somewhere around 6% that I see for the market to retrace. It's really the only way for the spread to widen so that the market can go ahead and regroup and move forward from here. Otherwise, the market breadth is extremely weak, and I see signs of fatigue. And everybody is basically holding the breath until the Federal Reserve, most likely lower the interest rates. The FOMC meeting is going to be, I'm just looking that up right now, is on the 16th to 17th. So that's really towards the mid, I'm talking about the next 2 weeks from now. So the probability as it stands right now for a 25 basis point rate cut, it's at 83%. So that largely improved from 75% sometime around last week. So it's not a sure thing. But very, very likely we're going to get a 25% rate cut. So that would be good for the market. So from now till let's say the 16, 17, perhaps the market will trade sideways and consolidate a little bit here. And again, I don't really believe this is the beginning of a bust cycle or beginning of a bear market, but rather it is taking a pause for the companies to digest all that they have taken in, so far, all the way up to, where we are right now in 2025. So with that, what do we have to look forward to this week? So this week we have manufacturing data by the name of ISM. It came in a little bit weak. Construction spending is a little bit weak. We do have jobless claims number, and again, I don't expect any amazing numbers here. The jobs data, it's going to remain weak, and it is a divergence, because it is indirectly related to consumer sentiment. Consumer sentiment, and again, it is still very low. Meanwhile, investor sentiment is very, very high. So we have a quite a bit of divergence here. But again, the market is moving forward. I still believe that is going to trade sideways, allowing the market to digest all the data that is coming in. And then with the Fed rate cut that is expected to come in 2 weeks from now, I do expect things will basically proceed back to normal and we can move higher again. So other than that, there is really not much else going on. Lots of companies are coming out with earnings. So far, it's been a mixed bag, especially with retail, what we have seen so far. But we are not entering into a bear market now. So I just want to make that very clear. I don't believe we're entering into the bear market now. Fundamentally speaking, we still have a lot going on for earnings for S&P 500, even though the economic activities is not showing us, any kind of a big boom or anything like that. But overall, the underlying investments that the companies or corporations are making are driving this upward momentum. But from time to time, we still need to take a break, and that's only normal. So 5 to 7% of a consolidation or a sell-off in between bull markets is very normal. I don't believe it's going to be a repeat of the April's low, just like from before. But a natural move of a consolidation period is very much warranted. So with that, I wish you all well. And again, hopefully Ed and Emil will be back next week and I'll be joined with them again. So I'll see you soon. Take care. Bye bye now.
Thank you for watching IVoT Eye On Investing. Please subscribe to our YouTube channel and click on the link in the description to register for early access to the platform opening soon, which includes access to our powerful IVoT forecasters and fundamental investment training.